Yeah, good morning, everyone. We had seen wide fluctuations in the US market yesterday. Nasdaq at one point of time was down by around 2.5% during the day and ended marginal positive. Overall, apart from that, the markets were in the US were lower. Apart from that, today morning futures are flat and Asian markets are a bit down. And in commodity, what we are seeing that some commodities are seeing good up move. Aluminium is up by around 2%, and iron ore is up by around 2%. Whereas crude has come off marginally. Yesterday it was at around $82. Now it is at 81, and copper is flat. So overall mixed reaction from the international market. We had performed very well yesterday, so we may see some profit booking on that account. Apart from that, there are some reactions of very small stocks are running at current point of time, and we had seen around 900 scripts in the circuit yesterday. So these are the signs of bit caution. So be cautious on all these stocks for the near term. Now I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Yesterday, we have seen a very great gains into the Nifty, as Nifty has just managed to maintain a positive closing above 80,000 psychological mark. From the last few trading sessions, we are emphasizing that 18,000 will be the first target on the Nifty side as long as it sustains over 17,100. So our target has almost achieved. Now going ahead, we might witness some cautious sign because Nifty had shown a very good amount of a rally, non-stop rally from almost at around 17,000 levels. Now going ahead, at a higher level, 18,170, 18,200 level will act as an immediate resistance level. Whereas on a downside, 17,920 will be the first support level. If it's break that level, then we are going to witness some profit booking into the Nifty, which might take a Nifty towards 17,800 to 17,700 levels. The overall we will remain a positive only, but at a higher levels, we might witness some profit booking. So just try to maintain the strict stop losses on the higher sides and book your profits accordingly. On the bank Nifty front, for the today intraday purpose, 37,740 is the first resistance level. Any move above that level, we expect a rally to be continued towards 39,000 and 39,200 levels on the higher sides. Whereas on a downside, 38,150 will be the first support level. Below that level, 38,000, 37,800 levels can be seen on the bank Nifty front. Coming towards the Nifty Finance, for today intraday purpose, the resistance is placed at 18,330. Any move above that level, we expect some positive momentum to be carried forward and which might take a Nifty Finance towards 18,420 levels on the higher side. Whereas on a downside, 18,150 will be the first support level. Below that level, 18,000 levels can be seen. The overall view will remain a positive as long as the Nifty sustains above 17,700 levels. So those who are having any long positions, they can book the partial profit at the current market price, or else they can maintain the stop loss on the downside and carry your long positions. I think that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. Good morning, everyone. This is Amit Guptani. So, as per derivatives data, we have seen major Y positions are getting added up between 17,700 to 18,000 strikers. So, that shows a positive scenario as we are seeing that the major OI positions of put writer positions are getting added up at 17,900 and 18,000 strike. While on the higher side, we are seeing that 18,000 strike is holding the highest call writer positions. Almost 7.6 million positions are headed up at 18,000 call right a strike. So till the time that position gets shifted on the higher end, as we are seeing in yesterday trading session, some of the positions got shifted at 18,200 to 18,400 strike, but still there is heavy positions at 18,000 strike. So currently we are expecting that market looks positive with the support of 17,900 level. on the downside, because we are seeing on the downside at 17,800 and 900 strike. Call writer positions got unwinded and put writer positions got added on. This is a negative positive data point as per the OI positions. As you are seeing, the PCR OI has now sustained above 1.20 level, and in yesterday trading session also PCR OI gave close at 1.45 level. So that is also positive scenario. So as per the OI data, we are seeing that there is not a major changes in the market. We expect the market to continue on the higher end, and on the higher end, we are seeing at 18,200 to 18,250 levels. So on the higher end, once Nifty comes around 18,200 250 strike, then we might expect some cautious momentum and some profit booking to be seen once the Nifty comes around 18,200 strike. So currently hold your long positions with the support of 17,900 level on closing basis. As per stock specific, we are seeing that the banking counters have performed really well in yesterday's trading session, banking and auto counter. From auto counter, first one would be the Tata Motor. We have recommended in yesterday trading session also, and we have carried forward. So Tata Motors looks positive for today's trading session. From banking counter, we are seeing that ICICI Bank and SBI. These two counter looks positive too from the banking counter. So keep watch on these two counters. Thank you.
Good morning. A few business updates for quarter 3 and as well as result. 5 Paisa Capital result was okay. Broking revenues grew by 27% quarter on quarter. So after few quarters, we have seen that growth over here, at least on top line, has accelerated. However, EBITDA growth was 16% quarter on quarter. And profit was had actually declined quarter on quarter and year on year. So it was at just 70 lakhs against QOQ profit of 1.4 crores. So companies basically focusing on growth and ignoring profitability in the short term. That is visible from the customer addition, as well as they had indicated that they had raised QIP money and they would be investing aggressively in marketing and acquiring new clients. So that has depressed the profitability. Quarter 3 ROE was at just 11%. So stock is also very expensive if we look on PE basis, but on price to sales it is at 5.5 times Q3 annualized sales. So net it's the view is neutral on the company because the profitability is still not there. So we also attended a con call of Indostar Capital, which is a CV financing company mainly. And out there, the current MD has stepped down, and Deep Jaggi, who is the chief business officer, will be taking over from R. Sridhar. Deep Jaggi has built CV businesses at companies previously, companies like HDB and Chola. And company said that they will be focusing on two main products which are high ROA, the used CV and affordable housing. Company has shifted focus away from new CV to used CV for better margins. Company has aggressive growth plans and they are looking at 4 to 5 times loan book in the medium term. So while the story sounds exciting on business parameters and the growth plans, but if we look at profitability again, even 2 years out, the ROE, our ROE estimate is at between 6 to 7%, which again is not very exciting. Main reason for depressed ROE is high capital adequacy of 35% and also very high cost to income ratio. And if they are saying that they will grow their loan book by 4 to 5 times, and they have indicated similarly branch expansion also they will do. So cost to income will remain elevated even going forward. That was on Indostar. And policy PB Fintech, the Policy Bazaar business update was positive. Quarter 3 insurance premium that they originated increased by 67% on year basis. And also Paisa Bazaar, which is almost 1/3 of their business. Over there also disbursement grew by 89% year on year. So we are positive here. On Paytm 197 Communications, the GMV, which is gross merchandise value for quarter 3, stood at 2.5 lakh crores and it increased by 28% quarter on quarter. This increase looks good. Also partly because of seasonality. Q3 is strong. Average monthly transacting users also rose to 6.44 crores in Q3, up 13% quarter on quarter. And as company had said, they would be focusing more and more on lending going forward. So the company disbursed loans worth almost 2,200 crores in Q3, which was up 73% quarter on quarter. So good jump on the lending side, but that is still a small portion of the overall business. So we are neutral over here. And lastly, Antony Waste Handling Cell. The company is mainly in collection and transportation of garbage. So this company reported 22% year-on-year growth in revenue, although on quarter basis it was flattish. So it is neutral for the stock. Thank you.
Yeah. Negative news for Vodafone Idea. Company has accepted one of the condition of government reform package of converting interest into equity, and this will be for the future interest on AGR liability, and this will amount to around 16,000 crore of dilution, or at the price of rupees 10. And the equity of the government in the company will increase to 35%, and promoter holding will come down to 28 and 16% for Vodafone and Birla Group. So the pricing is at lower level of around 10 rupees, which is based on the earlier calculations. So we feel that this will act very negative for the company in near term. This was not expected. People were expecting that Vodafone Idea will also opt for paying the interest rather than converting into equity. Then we have one of the result on the Mindtree result is expected day after tomorrow. Here the revenue growth is expected at around 5% Q on Q in CC terms. But the margins are expected to come off. Last quarter, the margins were at around 18.2%, and this quarter expected at around 17.7%. So apart from looking at high growth in Q on Q in the revenue for all the companies, we are seeing margin pressures mainly on account of increasing cost for the employees and high attrition rates. So that are having impact, and here it seems comparatively higher for the Mindtree. So overall results will be okay. And thereafter on 14th we have a result of HCL Tech. Here again the revenue is likely to increase by around 4.1%, and margins are likely to improve here to 19.7% as compared to last quarter 19%, though it will be much lesser than the last year of 22.9%. So there is a good growth in the revenue expected, but the margins are remaining lower. So overall result seems to be okay for HCL Tech as well. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.